Australian dollar futures open the session higher, but not as high as most people would think, given a record trade surplus number that came out overnight. Consensus was expecting 10.1 billion, actually got printed around 12 billion. I think the lid was due to the fact that this commodity-heavy country is seeing China release a lot of reserves in things they export, including coal and iron ore. Saw the ASX 200 also drop about 0.5% at the prime of the reporting season for the country. Also, about 2/3 of the entire population is still in lockdown. That said, we get into the meat of the U.S. session, and things really did change for the Australian dollar. We saw it, test the upper end of its range, attempting to make 3 days in a row of gains against the U.S. dollar. Despite U.S. data was good. Initial claims, continuing claims, POA filings, all were about 17-month lows. Second quarter productivity report came out better than expected, plus 2.1%. Our trade deficit beat expectations as well, 70.5 billion versus 70.9 billion. That said, we have equities touching records in the S&P 500, the NASDAQ, is weighing on the dollar itself with the yields as well. Also in the U.S., we heard news that COVID stats 7-day average at a 7.25-month high. Looking at option volatility, looking at the CME Group CVOL, options are trading about the 25th percentile when judged on a 1 to 3 month basis. At the money, vol is lower today. You have both the call variance and put variance, or up variance and down variance are both lower, but the put variance is up lower just a little bit more. So that would imply that skew is higher on the day. The skew is to the call. When it comes to options volume, not very heavy day, but seeing it strewn between like 75 and 76 strike, and also the 73 through the 72 strike.